today's webinar, as you guys can see on the screen. Today we will discuss geopolitics and also the relationship to the market sentiments. Okay, so I guess it's a bit late that we bring this topics to you guys, but who knows? This might not be the finale yet. I'm referring to the Middle East geopolitical crisis. Okay, if you guys have been following the news, the latest developments was the US and the Iranian delegates, they met in Switzerland. So they are now finalizing the peace deal. So yeah, hopefully this will be the finales. But as we look at the track records for the past 2 months at least, we know they tend to change the course, and yeah, it could lead to an intensified of the geopolitical tension in the region. Okay, so this will be the topic today. I will try to discuss what it is, how does it has an impact to the financial markets, and also I will bring in the recent three major geopolitical events. Okay, and then later share a bit of my thoughts, and yeah. So at the end, we will opens up for the Q&A, so you guys can ask me question. Right. So as always, before we start, I have to read out the risk disclaimer for today's event. This webinar is for informational and educational purposes only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instruments. Trading CFD and other leverage product carries a high levels of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposit, so it is important to fully understand the risks involved before engaging in trading. While we will discuss market analysis and trading strategies, these are purely for educational purposes and do not guarantee success. By participating in this webinar, you acknowledge that Pew Prime and I are not responsible for any trading decisions you make or any losses incurred as a result. Okay, so yeah, like I said, these are the topic that we are going to cover today. I will share with you guys why this matters to you for all active traders out there, and then I will pull in three major geopolitical events that happened recently for the past decades, and then yeah, fear and greed index. I will introduce you guys the fear and greed index, and also some news trading tips. Okay, so let's dive in. Okay, so this is a quick questions to you guys. Okay, so answer in your heart after you read out the question. Right, imagine you wake up tomorrow morning and see this headline: US breach peace deal and launch new round of attack on Iran. What would likely to happen? Okay, and like I said early on at the starting, so this happens multiple times. Okay, for the past 2 months. In fact, like just 1 month after the war outbreak, they already discussed for a peace deal, and then quickly they breach the deal, and then both sides crossfire again, and then it happens, I think, at least 2 to 3 times, if I'm not mistaken, right? And then yeah, so if you has been trading in the market for the past 2 months, you should know the answer. Okay, but I will share with you guys like why this time is different. Okay, in the later part. Okay, so I hope that you guys got it right. Okay, gold falls and then oil surge. Okay, every time for the past 2 months, if either side of the parties that involved in this regional crisis actually leads to a softer gold and also a stronger oil in the markets. Okay, so I hope that you guys got it right. And if you like know about this, I'm sure that you guys might have a high chance to make profit out of the market. Okay, if you have been following the headlines, okay, you trade with news. Okay, these are the patterns for the past 2 months. And like I said, this might not be the finale yet. Okay, or although they already reached a peace deal in Switzerland days ago. Okay, so but yeah, we don't know, right? We have a very aggressive US president and then also we have the very patriotic Iranian, always ready to fight back. So, and also not only these two party, we also the situation becomes so complicated when we involve Israel and also Lebanon. Okay, so four countries that are now actively involved in this geopolitical crisis. So more to come, but of course, touch wood, we wish the peace come as soon as possible. But yeah, if anything really happens, this will be the result. Okay, resulting a softer gold and also a stronger oil, right? Yeah, why this topic matters to all active trader out there who keen to trade in the CFD markets. Okay, the reality today is one single headline, especially now we have a very high profile US president. Okay, it's not Joe Biden's, it's not Barack Obama's, but Donald Trump, who always steal the spotlight in the financial markets. Okay, is always at the center of the financial markets. And he himself like to posting on his social media. Okay, so he always direct the directions in the market. Okay, so this make it more happening and is rather matters more to every single active traders out there. Right, one single headlines can move go by 2 to 5%. Okay, if it's not one sessions but maybe 2 sessions to 3 sessions. Okay, especially if you look back what happens since the oil spike, I mean the gold spike last year and until today. Yeah, you can at least tell weekly change of the gold price at least 2 to 5% at least. Right. And then since the war outbreak, we have a very, very volatile oil prices. Right. It wasn't that okay. It was relatively stable years ago, but yeah, since Iran take in charge of the Straits of Hormuz, yeah, this happens. The oil price fluctuates a lot. Okay, and needless to say about BTC, sometimes irregardless of whether we got a geopolitical issues or not. Yeah, BTC sometimes is so volatile that it will change uh, by thousands of prices in a single day. Okay, and then major stock indexes, and it wasn't that volatile in the past, but then since April to May, when everyone's in the market so focused on AI, and on Nvidia's, on Micron's, on Samsung, right? So it makes the stock indexes more happening, okay, more volatile as well. So yeah, and headlines does put an direct impact on all these four major asset classes that I covers. Okay, so yeah, I would say what else you guys are trading? Okay, if it's not gold, if it's not oil, if it's not BTC, and of course I didn't covers US dollar. So yeah, 85 to 90% of the things that we trade day in day out involve US dollar. So the US dollar is also impacted by news headline. Okay, so I think almost everything that we trade day in day out will have a direct impact from the news headline. So of course it does matters to us. Okay, so yeah, this is the core thesis, right? The geopolitics is the spark, okay, and the market's sentiments is the fire, and the market volatilities is the things that we seek for, is the opportunity. Okay, if the price is so flat, case, for example, some of the least traded forex pairing, for example, let me think, AD NZD maybe. Okay, maybe like NZD CAD, for example. Okay, like not a lot of people trading those. So the price actions, okay, the market volatilities is very minimum. Okay, meaning to say as equivalence to no opportunities for traders to trade. Of course, we want to trade with something that has high market liquidity, a lot of participants, so that there's a lot of exchange in between parties, buyer and seller. Then it will occurs trading opportunities to us. Okay, so geopolitics is not the things that we focus, but how the markets interprets things, how the markets interprets the headline, which is the market sentiments. This is um the speculations that we want to make. Okay, the analysis that we want to make, so that we can go to the right market directions. Then ultimately we can make profit out of the market. Okay, this is the thing that we want to do. The in the in the future, so that we can improve our win rate, right? This is our ultimate goal, to make profit out from the markets. Okay, so the key takeaway here is geopolitics tells you where to look. Okay, it attract your attention, whether you look at gold, whether you look at other asset classes, oil, or Wall Street. Okay, for example, right? Yeah, it just tells you where to look, but the sentiments tells you when to enter. Okay, so when the market sentiment hits, it is when you start to trade. Right? Clear? Now, so I will share with you guys three recent geopolitical events, so that then I will share some of the very unique asset classes that involving highly involved in this each geopolitical events. Then you guys can in the future, if anything happens, okay, because we are humans, so humans bring troubles. So I'm sure in the future we definitely will have new geopolitical events. Then at least you can prepare yourself, and then you know what to trade. Okay, so just simply go through the background of the US-China trade war. So in March 2018, okay, it was during Donald Trump's tenure. So he announced tariff on metals product from China. Okay, and China later also responded with tariff on selected US goods. Okay, this is just the spark, right? But then this geopolitical events escalates in July and August, because they added more tariff on each other. So trade war escalated, with both countries raised tariff higher on each other imported goods. So in this particular events, the things that is highly discussed, okay, in this event is actually soybean. So although everyone might think that US always is holding the most advanced technology, okay, then they export the most, like Nvidia's, the chips, okay, Intel and Apple's product. Okay, yeah, mostly people might thought that US only exports advanced technology, but in fact they also rely heavily on the agricultural goods, agriculture product. Okay, so actually, during that time, okay, in back in 2018, China is the biggest buyer of US soybean. Okay, so this is the backdrop of the whole events then, okay, in 2018. So, but then later the year, okay, 2018, so both countries agreed to a 90 days truce for this trade war at the G20 summit. What when I say this, you might also bet that Wall Street also impacted, and then Hong Kong Hang Seng Index also impacted, US dollar, gold, but there was like a very temporary market volatilities. But the asset classes, like I said, has like the mostly discussed is soybean, because China was the biggest soybean importer from US, and then when the China response to the US tariff, they stop import soybean from US. So this is leads to what happens with the soybean prices. So you can see over here at the start, when people is still digesting what would be the impact of the soybean after this trade war happens. It was at the very elevated levels, okay, for the soybeans. But later, when China announced that they stop buying soybean from China. I mean from US. So they get from elsewhere. I think Brazil's or whichever country. So it leads to the soybean price to plunge. Okay, because no buyer anymore, so no demand. So when there's no demand, the soybean prices drop. Okay, so this was a very tough time for all the farmer in the US who produce soybean, who harvest soybean. Okay, and then later it gradually rebound, okay, for the soybean because they signed a truce for the trade war. Okay, so like I said, we might have a temporary market volatility on gold, on equities markets, on currencies, but this is the highly discussed asset class asset during that time. So it has a very meaningful there's a very very meaningful assets for this particular event. So that's why I bring this up. So like I said early on, every events have one unique assets that allows us to trade, to seize the trading opportunity. So for this event is soybean. Right now, later after the pandemic, okay, we have another geopolitical issue, okay, or tensions is in the east of the Europe, okay, is between Russia and Ukraine, right? So in February, okay, Russia launched a full-scale invasion to Ukraine, okay, and this is like the largest military conflict since World War II. Okay, and then following by that, the Western allies response with the NATO's right sanctions on Russia, and then remove Russia from this SWIFT system. Okay, so Russian foreign reserve were frozen, and don't forget by this time Russia is one of the most important country to export energy to the rest of the world. Okay, they are very rich in natural gas. They are rich in crude oil. Okay, so yeah, there has been a supplier to the euro. Okay, in terms of energy. Right. So during this time and when the Western allies sanctions on Russia, you can imagine what happens to the crude oil prices. Okay, what happens to the natural gas prices? Okay, that must be crazy, right? Because it will become very scarce. Okay, and then when the supply is limited, means that the price goes up. Okay, and then later in July, okay, Russia successfully redirect the export away from the euro. Okay, so they bypass euro and then they get buyer elsewhere, and then they selling to the Asia because the Asia countries, India, China, they are not involving with NATO's, they are not involving with the Russia-Ukraine war. So they buy cheap energy from Russia because Russia cannot sell to the Western airlines. So they make a discount and then they straight away sell to the Asian country, including India and Asia, in China. Right. So in this case, we're talking about crude oil. Okay. So at the very beginning of the war, okay, since February, remember, and then in March, they start to sanctions on Russia products. So like I said, during that time, the energy becomes so scarce, and yeah, because the Western worlds cannot get enough energy, okay, crude oil and also natural gas. Okay, so by then the prices become so expensive. Okay, they have to get from elsewhere. Okay, so in fact, yeah, Russia is one of the biggest exporter for crude oil, right? And then later, remember in June and July, so after they deal with the Asian country, the prices started to ease. So they start to sell oil price at a cheaper rate. Okay, so that they want to attract more buyers, right? Because they can't sell it to the Western allies. Okay, so this is the whole story behind the price changes of the crude oil. Okay, so like I said, every event will have a very specific assets that involve like highly involved in that particular event. So I don't know what's going to happen in the future. So you have to dig out what is like highly related to that particular event. Then if we seize that, if we really got that, we just trade on it. And also not only stop there, remember early on we say the geopolitics issue is just let us know where to look at, but the market sentiment is the key. Okay, this is the more challenging parts for each trader here listening and also the traders out there. Okay, so we have to find out which are the assets that is highly involved with the events, and then when we trade that, we also have to gauge the market sentiments, whether this assets is going up, okay, become more expensive, or going down, okay, become cheaper. Okay, so we have two very different story with soybean and crude oil. Okay, now last the Middle East crisis. This is like a very fresh one, and it's still happening. Okay, like I said, we almost go to the finale, but not sure yet, right? So at the last day of February, the war outbreak. Okay, so U.S. joined with the Israeli troop strike on Iran, and then later, of course, Iran's also retaliate. Right, so this is, yeah, I think everyone knows about this. Everyone remember what's happening, right? So in between these 2 months, of course, every time we can see the news headline changing course. Or one day they say, yeah, they are reaching out for a peace deal. They sit down together in Pakistan to discuss for a trade deal. I mean, for a peace deal. Then later on, they breach the deal and then attack on each other again. Okay, crossfire, and then later on we have Lebanon and Israel have an intense fight. Okay, intense crossfire. Then now they meet again in Switzerland. Okay, and then yeah, we are reaching a peace deal. Okay, it's a very good news. Okay, good news to the market. So, but like I said again, we're not sure one day if they any of the parties going to breach the deal and then escalates the whole event again, right? So this could be it. And then this time around, things got very different. The thing got very different. Why? Let me explain. Okay, we talk about the dollar, the US dollar. Okay, so by textbook, in the past, we know every time when there is a war, these are the two asset classes that will highly involve, or the price of the asset classes will be so fluctuated. Okay, which is the gold and also crude oil, right? So of course, crude oil is also impacted a lot in this event. But why I want to pick the dollars index is because this time around is a little bit different. Okay, so this time around, people are talking more about the interest rate. Okay, so when the war came, okay, and then like everyone rushed into gold, but then gradually they see that, well, why the gold price is not spike up, but then it's gradually going down. But then on the other hand, when people look at the dollars, it keep on appreciating day by day. And in fact, if you look at the dollar index now, it has gotten up to the highest levels in the year. Okay, it's got up to above 101 mark, right? So why is it? So let me share this with you. So when there's a war outbreak, and then the Irans take control over the Strait of Hormuz, and this is when we see the oil prices become so expensive, right? But then don't forget, at the same time, we have a rather booming economic, right? Since 2023 to 2024 to 2025, every major economy, actually they are controlling the inflation, meaning that the economy is actually not bad. And then if you refer to the non-farm payroll, if you refer to the CPI in the US, it can also kind of tell that the economy is booming. Meaning to say, at the same time, actually, a lot of the country, they are demanding for more crude oil. Okay, so when the market is good, it will, equivalence to a high demand for crude oil, right? So when the Iran's, take control over the Strait of Hormuz, we cannot access to a cheaper and also lots of crude oil supply. The crude oil becomes so expensive. Then ultimately, the very expensive crude oil will then pass on to the markets, okay, to the retails, and then at the end of the day will lead to a spike of the inflation rate, right? So this is the whole logic or rationale behind this whole event. So when the market perceive a potential surge of the inflation rate, then they will then speculate that the Federal Reserve, the Bank of England, the European Central Bank, RBA, RBNZ to do something with it, to deal with it beforehand. Okay, which is leave the interest rate higher, right? So now, if you are a investor, okay, in Wall Street, would you rather to hold the dollar index, just hold the dollar, or and then also or the dollar assets, or you want to hold a gold which will not give you any return? Okay, if you hold the dollar itself, it will returns with a 4% of an interest rate. Okay, give you 4% every year. But if you hold gold, nothing's you're gonna get. You just hold it as a safe haven asset. Okay, so in these events, people tends to hold dollars and also the dollars assets rather than holding a non-yielding metals, including gold and also silver. Okay, so you can see since the war started, you can see the dollar appreciated a lot, and then this time it was people start to discuss about a peace deal, and then the dollars actually fluctuated, and now eventually it will continue to goes up. Why? Because although we are coming to the end of the war, okay, the Middle East geopolitical tensions, but the facts have already signaled the markets that we are at least getting a one rate hike by the end of 2026. Okay, just minimum is one, so it might be two, it might be three, depends on the market, the job market performance, as well as the inflation situation in the US. Okay, meaning to say now the market is expecting the dollars to continue to appreciate against most of the G10's currencies, especially on euro. Euro is kind of weak against the New Zealand dollar. The New Zealand dollar is also kind of weak, and also Japanese yen. Okay, Japanese yen is also quite weak, right? So this is the asset that is mostly discussed in the market, right? And of course, the focus was shifted away after everyone talk about AI, in May, and but anyhow, the dollars index, okay, still prove that everyone's predict that in the near future we're gonna see the dollars to appreciate further. Okay, I think now stand firm on above 101, and it might just go up to 102, 103 this year. Because we have also at the same time a hawkish Federal Reserve Chairman, okay, Kevin Walsh, who just sworn in last month, right? Yeah. Let's also, I also want to, introduce you guys to the Fear and Greed Index. So this is a tool for you to gauge the market sentiment. So remember, I say, the geopolitics event is not the key, but to gauge the market sentiments is the key. So this is one of it. So buy textbook, or when you sense that the markets not really have a lot of risk appetite, people are being more cautious. Okay, meaning to say when the VIX index goes up, all right. So buy textbook, people tends to hold more gold, hold more dollars, but then don't want to touch Wall Street, don't want to touch equities, don't want to touch crypto because they are more risky. Okay, so this is the relationship that you want to bear in mind, right? So the VIX index is a tool that track, okay, to on the S&P 500, okay, to track the market volatility. Okay, simply high reading equal to risk averse. Okay, if you see like suddenly the VIX index spike, okay, it means that it's risk averse. People are selling the stock. Okay, when the index go low and low, it means that the risk appetite in the market is healthy, is high, and then the stock market tends to goes up. But those safe haven assets like gold, like dollars, tends to go low. Okay, so this is how we read the market sentiments by using the VIX index. Okay, we are actually allowed to trade VIX index itself. It is also available on PU Prime product list. So in the future, you can know what to do. So when you just read the headline, new, a very fresh geopolitical issue breakout, then you can also keep an eye on the VIX index. Okay, sometimes it tends to just spike up, and when this have a huge spike, okay, we can make money from it, right? Not only that, the crypto market has also its own fear and greed index. So they take a lot of data, so they come up with this fear and greed index. So I think most of the crypto platform allow you to check the index. Okay, so it goes with five category: extreme fear, fear, neutral, greed, and extreme greed. Okay, so at least you can tell what happens in the crypto markets. And of course, I know now the cryptocurrencies are the new darling in the financial market because of the high market volatility. High market volatility is equal to more trading opportunities, right? So yeah, this is the crypto fear and greed index. So how we look at it is usually if this index fall in the red zone, it tends to tells the traders that the bearish trend tend to last, might extend, okay, might continues. But if it goes too extreme, it means that it is rebounding soon, because if everyone is selling, then the market maker might just want to go to the opposite side. Okay, same goes to the green zone. So over here means that the markets tend to be very good, crazy. Everything goes up. BTC goes up, Ethereum goes up. But when it goes to the extreme greed, meaning everyone is buying, the market is overheat, then you have to be cautious, because the corrections might be just around the corner. Okay, so this is how usually people in the crypto market read this fear and greed index. Okay, five zone. Okay, middle is neutral, means the market is like lack of directions, and then you can sell more over here, buy more over here, but be cautious when the index go to the extreme. Okay, extreme fear or extreme greed is where you want to be cautious. The market might just change of course very, very soon. All right. Yeah. And also at the same time, I want to introduce you to the risk on and risk off asset. The safe haven asset, like I said, is the US dollar and the Japanese yen. So Japanese yen, why? Is because for the past 1 to 2 decades, the Bank of Japan keep the interest rate at zero, so it make the currency very, very stable. So there's no inflation in Japan for the past 1 to 2 decades. So when there's anything happens in the market, people tends to hold the Japanese yen because it is stable, because everyone know they will have no interest rate changes with the Bank of Japan. Okay, and for the US dollar is because most of the thing that we trade today internationally, we are using the US dollar, so there's a value with the US dollar, right? So yeah, it has this characteristic of the safe haven. People will just tend to hold the US dollar because it is more valuable compared to other currencies, right? At the same time, also people look at gold and silver because it has the perceived value itself. Yeah, since like 1,000, 2,000 years ago, people already love the gold so much. It has the value, is scarce in terms of supply. So during the period of uncertainties, people will tend to hold gold, silver, and also it is not only that it is a precious metals, but it is also industrial use. That's why the silver has the value itself. Okay. Apart from that, government bonds. So government bonds, it doesn't mean any government. It has to be the first world country government bonds, U.S., Eurozone. What else? Which governments you have a high confidence? I think definitely not UK, because they changed seven prime minister in 10 years. So I think they are politically unstable. Okay, maybe maybe Singapore, maybe Switzerland. Okay, I don't know. Yeah. So during the periods of uncertainties, people will also tends to hold the government bond, because the government least likely to be default on the bonds. Okay, right now, on the right hand side, the risk on asset. Right, we are talking about the commodity currencies, Australian dollar, New Zealand dollars, and also Canadian dollars. Why? Because they this country, they export a lot of commodity. So during the market is very booming, the economy is very booming. The people around the world, I mean the countries around the world tends to demand for more commodities. Okay, then these currencies, Australian dollar, New Zealand dollars, and Canadian dollars, tend to benefit from a very rich on market sentiments. Okay, and then apart from that, crude oil. Okay, crude oil is also well, highly related to the market condition. Okay, to the economic conditions. So, especially on China, because China is the biggest oil importer in the world as well. So, if the China economy is doing well, it will tends to import more crude oil, and then it will have a direct impact on the Canadian dollar because Canada export a lot of crude oil as well, and the Canadian dollar is highly linked with the crude oil prices as well. So when the market is very high, okay, the risk on sentiments is real. The Canadian dollars tends to benefit from the sentiment. Okay. Then thirdly is equities markets, Wall Street especially, right? Will benefits from the very risk on sentiments. Okay, especially like I said, since April and May, people start to talk about AI, and yeah, this is like a very booming topic, a booming sector industry. So anything that is involving in the in the AI industry, in the tech industry, in the chip making industry will benefit from this very rich on sentiments now. Okay, you can look at the stock performance of Nvidia's on AMD, from Micron, Samsung, SK Hynix. Okay, they are they are doing so well now, which is because of risk on sentiments in the equities markets. Okay, so this is like a cheat sheet that you want to remember during the period of uncertainties. What are the assets that we can trade, and during the risk on sentiments, what are the assets that we want to look into? Okay. Now, this is also lastly where we're talking about the news trading tips. Okay, ways geopolitics can kill the account, trading the headline. Okay, but not the price. News say best, then I'll sell. Okay, this is very wrong. Okay, like I said, geopolitics is just for you to know where to look at, but the market sentiment is the key. Okay, so in the past, okay, in the past, for example, this Middle East crisis, in the past, it tends to lead to appreciations for gold prices. Okay, the gold price tend to trade higher and higher, but this time around, this is not the case. Okay, so I already explained the logic behind this. Okay, if you just stick with the textbook, says that when there's a geopolitical events, the gold tend to spike. Okay, this time you're gonna lose a lots of your money. Okay, so sometimes bad news is already priced in. Okay, so yeah, like I said, this is also I always share with my colleagues and also my sales personnel. Say, always okay. This time around, for example, this event, we always look at the crude oil prices. Okay, if there is a good news, okay, like for example, Donald Trump say, they have a good progressions to reach a peace deal with the Iranian official. But then when you look at the oil prices keep on going up, means that this might not be a real headline. There must be some things is the market look at it differently. And then it is always true. Why? When the President Trump say one thing, and then when I look at the crude oil prices, it's not going down, but tends to keep on climbing. Then later on, I'm sure I will see the news that the Iranian side say there's no such thing, okay, deny there's a such thing, and then yeah, a change of course of the directions of the events later. Okay, and then secondly, ignore the weekend gap. So you can hold your positions for longer during the peacetime. Like for example, when the market is so high, when it's so risk on, if you want to hold some of the good stock or index, you can. But when you're trading in a period of uncertainties, high uncertainties, a gap can just kill your whole account. It might just wipe everything that you have previously owned. Okay, so don't risk yourself, don't risk your trading account during the time of uncertainties. We can be more cautious. Okay, we don't try to avoid to hold your positions over the weekend. We just don't know what's going to happen over the weekends because we have 2 days and there's a lot of things going to change over the weekends, and then later, the market resume on Monday. Yeah, the price gap gonna be real, and high chance gonna kill your account. Okay, so we don't do that, right? Thirdly, forgetting the other side. Okay, if the war is bad for stock, who benefits? So sometimes we have to also think out of the box, like the first example about the soybean. Okay, of course, I know this is not the things that we trade every day, but then yeah, sometimes we have to really think out of the box. It might not be soybean, it might be silver, and then it might be orange juice, it might be cocoa, it might be cottons. In the future, we do, I'm not I'm yeah I cannot tell like what's going to happen in the future, but when we look at the news, okay, we have to think of the box, like which commodities or which currencies or yeah will have the highest impact. Then we can focus on this more. Okay, not only these conventional assets. Okay, like the U.S. dollar, gold, and crude oil. Okay, so what we can do better is understand the market narrative. Okay, this is very important. We cannot blindly believe the market headline because it will try to lead us to a very wrong directions, and then we just burn all of our money. So this requires market experience. Okay, you cannot learn this within like a few months, half a year, 1 year. It requires a few years of trading experience. Try to dig out what the market trying to tell you, and not only just purely look at the news, look at the headlines, but also at the same time you have to look at the price action. Okay, like I said just now with the crude oil prices. So when sometimes the uh headlines tell one thing and then the price action tell the otherwise, so we have to think twice, we have to think it deeply, ask ourselves what is actually happening. Okay, so understand the market narrative is very important. We don't just trade right away like what the news tell us. Okay, and then follow the capital. This is hard for the currencies. Okay, it is hard, but then for the crypto markets, we can check. Okay, we can check the ETF net inflow. Okay, we can check on the BTC whales. And then for the stock, we can also always check with the trading volume. Is more people are selling or more people are buying, right? Always track them. Just follow the majority, basically. Okay, so it just wouldn't go too wrong if you follow the majority, because the institute will be the major player in the markets. Okay, just follow the big player in the markets, then it shouldn't be too wrong, right? Lastly, it's also very, very important, manage your trading risk. Meaning to say, yeah, just set your stop loss and TP. Don't be too greedy and keep tuning the TP in the good markets, and also don't be, chicken out when you want to admit losses. You have to just admit it. Don't tune your stop loss again and again. Okay, and then just hope that one day the markets will just reverse to your favorable directions. Okay, this is not going to be true. Every time when you place a positions, you have to think thoroughly, and also when you just set your TP and stop loss, try not to tune it. Okay, try not to change it. This is how you manage your trading risk. This is how you're going to protect your trading account. This is very important. The market is not going to die. Okay, it traded 5 days, 24 hours. Crypto markets non-stop, 7 days, 24 hours. The opportunity is always there, but your trading account is not always there. Okay, your trading capital is not always there. We try to make more profit as we can, but before we learn how to make profit, we have to learn how to make losses. Okay, how to emit losses, how to protect our capitals before we learn how to make profit from the markets, right? Yeah, so this is the last slide, a key takeaway for you guys. Geopolitics doesn't move the market directly, but sentiment does. Okay, so I think I repeated this like 3 or 4 times already. So this is the key. I hope that you guys just take this today. Okay, you can just forget everything, but today you have to learn that geopolitical events is nothing but what is the market sentiments is the thing that you have to think twice. Okay, headlines create opportunities, especially now. We have a very aggressive U.S. president. He says thing, okay, he says very aggressive thing, he give very aggressive comments. So he does change, he has the abilities to change the market direction. And also not only him, we also at the same time have Elon Musk, okay, he who also love to comment on the markets, which is also, someone that can create market volatilities. Okay. Technical is also a key. Okay, tell you where to enter, where to exit. It is a key for you to learn, support and resistance line, where you place your stop loss and also your TP, and then stick with it. Okay, you don't change it. You have to be disciplined, right? And then lastly, sentiments tell you what to trade. Okay, sometimes you might think you like, yeah, the gold example again. The sentiments will just tell otherwise. We have an intensified um geopolitical events in the Middle East. Okay, every day we see crossfire between Iran and US, but then the gold just not going up. Okay, so we have to read the sentiments and then we just trade accordingly. We cannot be stubborn and we cannot just bets that one day the markets will just go to your favorable direction. Okay, this is not true. We don't ask the market to follow us, but we follow the markets. Right? Now, last quote for you guys. The markets rewards the traders who understand the story behind the move. Okay, this is a very, very important key takeaway for you guys. Okay, so understand the market, see what's the market trying to tell us, and then we trade accordingly. But just don't trade blindly. Don't trade blindly with the things that you learned previously, because especially now in the day, things change very quickly. Okay, and then the markets perceive the market very differently from what we learned in the past. So we just have to change accordingly. Okay, we have to learn day by day. Okay, so especially in this latest geopolitical events, I learned that it is not always true that we can stick with gold. We just enter long positions when there's a geopolitical event. Okay, this is not true. And then same goes to Wall Street. Last time when there's a war, Wall Street will just face strong selling pressure. But this time around, you can see Nasdaq, S&P, Dow Jones all goes to all-time high. Okay, this will not happen in the past. Okay, but then happen now. Okay, yeah. So this is already the last slide for today, and yeah, thank you, thanks for coming. And then now I will open up for the Q&A. So if you have any questions, you can type it up and see if can answer your question. I see a lot of people say hello. Hello to Elnela, Tyrone, Lucy from Kenya. Welcome. Okay, so yeah. Any question from you guys, Romin? Hello. You guys got any question for me? You can type in the Q&A, or just, does the market manipulates play a role here? Well, no one admit that, but if I say no, would you believe for Patrick? Okay, who going to manipulate the markets? Okay, and then the two name I mentioned just now, we have Elon Musk, also we have Donald Trump. Are they the manipulator? Okay, you ask me, you can definitely tell the answer yourself. Okay, thanks, Tyrons. Thank you. David asks how best I can spot the market sentiments during active hour. All right, I think if you are a new trader, maybe you can try to avoid the New York sessions, which is now, okay, the first hour when the Wall Street start. Okay, then you can try with demo account, and then if you making losses, it tells otherwise, right? So well, the market sentiment just shifts very, very quickly nowadays. So VIX index, the gold price changes is something that you can tell the market sentiments. If you are trading ousting, okay, if you are trading with the Japanese yen, if you are trading with forex pairing, if you're trading with BTC, okay, for example, if you're trading with BTC, you can always look at Wall Street. If the Wall Street is selling, okay, if the indexes is going down, then at the same time you can tell that it shouldn't be too good for the crypto markets. Okay, so this is the relationship. It does take it takes time for you to build this experience. Then you can tell the market sentiments, sort of building this market sense. Okay, you might be you might be saying that I'm bullshitting, but this is real. The market sense, You will just sense it one day. Okay. Yeah, Patrick, you are true. By their talks, they can actually manipulate the market. Is it crypto market a sleeping giant? It is not sleeping now. Okay, it's selling fast. Okay, I think pretty soon we can see BTC challenging the 60K mark, and then it might just drop below. Okay, so it's not a sleeping giant. And a tips for you, Patrick. I think you can refer to micro strategies share prices. Okay, they changed the name now to strategy MSTR. Okay, because it is now approaching the very critical 100 mark. So you can imagine what's going to happen to BTC if the share price drop below 100. Okay, so this is a tip for you. Okay, you can see the relationship between the strategies ING share price to BTC. Okay, because this company is one of the biggest BTC holder. All right, so I guess there's no more question. Anonymous, I'm a new trader. How does the Tokyo session work in this unstable period? So yeah, the Tokyo sessions happens yeah, obviously in the New York morning. I mean the Tokyo morning tends to fluctuate the yen, okay, the most, and then later gold and also the crypto, because a lot of Asian people trade crypto. Okay, so yeah, while you asking like work in the unstable periods, just avoid it if you feel is unstable. If you cannot analyze the market, just avoid it. You can try to trade during the time when the market is more stable. Okay, so hope that answers your question. Right. So if there's no more questions, yeah, let's call it a day for today's sessions. Once again, thanks for your support, and yeah, I'm gonna see you soon in the next one. And thank you, guys. See you in the next one. Thank you. Bye bye.